Credit economist Dennis Gartman is with us now. He says Europe's problems are just beginning, and he's not that optimistic for U.S. stocks for this year either. Dennis is the editor and publisher of the widely regarded investment report, the Gartman Letter. He's also the manager of River Crescent Hedge Fund. Dennis, always glad to speak with you. Thanks so much for joining us. You're saying Europe is trumping all other concerns in the market, and that includes tensions in the Korean Peninsula, and that includes anything else that we're seeing.
Oh, I think it's absolutely correct, Deirdre. The problems in Europe, I'm afraid, have just begun. I think that this is going to get demonstrably worse, and were it not for the huge amounts of political capital that have been expended by the monetary and political authorities in Europe to keep the union together, we would have seen the union split apart quite some time ago. But now you're getting down to the point where Greece, Spain will probably be asked to leave the union at some time, I think, before the end of this year and certainly before the end of next year. These things take time, but I think the tensions that have been put into effect, the problems that have been brought to the surface, are only now becoming evident.
Dennis, you said in the past that this is one of the most violent times you've seen for currency trade in your 35 years of experience. If you think the euro is going to end, what is the smartest thing to do with any of the crosses? Well,
first of all, avoid owning the euro at all costs until such time as they toss some of these countries out. Then the euro may, in fact, become quite a good deal more expensive. But in the interim, you want to avoid the euro. Can you get a bounce? Could we see the euro trade back to 127, 128 in the course of the next several weeks? Well, of course we could. But over the course of the next year, if things play out as I think we shall, certainly par is reasonable. And we have to remember, it was only 7 or 8 years ago that we were trading well below par. So the idea of par or worse for the euro versus the U.S. dollar is not as alien as it might seem.
Dennis, what would you say to people who say there are many contrarian, that it's become too favorable to short the euro or to be a bear on the euro? Jim O'Neill from Goldman Sachs, one of them, Keith McCullough from Hedgeye Risk Management, saying, you know, the euro deserves some report. We'll find some support at 120.
Well, it's a very good point. And if you look at the data from the IMM, which is really the only place that you can get some analysis of who is short and how many people are short, clearly that is a very, very, very crowded trade. It wasn't that crowded 6 months ago. It wasn't crowded 5 months ago. It is very crowded now. And to be short of the euro right here is probably not such a good idea. But if you get a rally of 500 or 600 pips, which is reasonable, then it's probably a much better idea. 500 or 600 pips will run in a great number of the shorts. That'll make the market healthy again. So Jim O'Neill, I think, is correct. Here at 122, 121, it's probably not such a bright idea to be heavily short. But once the shorts have been run in, then it shall be.
All right, Dennis, we thank you so much. Dennis Gartman joining us there on the phone.